Hi there, good afternoon. You're tuned into ET now, and this is Market Fatafat with me, Cheryl D'Souza. Along with me, I have Vinny Motiwala. Very good afternoon to you, Vinny. And yes, the markets are seeming pretty wobbly in today's trading session. No doubt, we have weak handover coming in from the US markets, but it is the HDFC twins that's actually weighing heavy on the benchmark indices, as we can see on your screen. You have Nifty after recovering quite smartly. We saw a sharp dip come in, 0.5% downtick coming in for the benchmark indices. You have HDFC on your screen, that is down over almost 5%. Let's take a look at what the Nifty Bank is doing at this juncture, because Nifty Bank is the one that's underperforming the benchmark indices at this point in time. Over 1% downtick coming in for the Nifty Bank, yes, and it's the HDFC twins that are definitely weighing heavy on that particular index as well. Talking about the broader markets, they are moving in tandem with the benchmark indices, or with the small cap index falling about 0.5%. Right now, if you look at the market breadth, it is actually now tilted in favor of the decliners. At one point in time, we still had hopes that we will advance for the rest of the session, but right now you have the market breadth that's tilted in the favor of decliners. Talking about the sectoral indices, you have only auto, realty, FMCG that are actually bucking overall market weakness. You have PSU Bank Index that's given up all of its gain right now, nudging towards the negative territory. And you have metal, IT as well as pharma that are declining in trade. So that's the way how the market setup is looking like, Vinny. This Friday afternoon, definitely a wobbly one coming in for the benchmarks. You have Nifty that has moved away from that 18,100 odd levels as well.
Absolutely. With that, let's get started with all the stocks that are buzzing in trade on the back of news flows or on the back of technicals as well. And today, from the research team, we have Harsh as well as Lisa joining in with us. A very good afternoon to both of y'all. And we'll be having Vaishali Parekh who will be joining in with us as well. But let me start then with the first stock that is in focus, and Dabur. We have to talk about that. Did come out with its numbers. Saw a bit of a weakness in terms of margin pressure for the numbers. We have brokerage notes that have actually cut some of their EPS targets. Now, Investec is actually maintaining a hold. They've cut the target price to 542 rupees per share from previously 584 rupees per share. And they've sharply cut their estimates by 5 to 8% for FY23 to FY25 and do not rule out another round of earnings cut as well. India volumes have declined for the 10th quarter for the companies is what they are highlighting. Macquarie too has cut their target price, cut EPS also for the company as well, from 7% in FY24 expected. They're factoring in a near-term margin headwind as well. Jefferies too has downgraded Dabur to a hold from a buy and cut the target price to 545 from 640 rupees per share. Trimmed the EPS estimates by 8 to 9% as well. So yes, brokerage notes are not quite happy with that. Keep an eye on that, because obviously management is expecting a mid-single-digit to a high single-digit terms volume growth in FY24. But let's keep an eye out on Dabur. Today down and out in trade. Nothing exciting in terms of numbers there.
All right, let's move on then, and let's talk about Manappuram Finance. This one is getting knocked in today's trading session. Once again, it has hit an over 2-month low. As we speak, 13% downtrade coming in for that particular counter. The company is set for the worst weekly loss since mid-February 2022. The promoter of the company, VP Nandakumar, says that he's got the ED order over freeze of his personal assets, which also includes shares worth about 2,000 crore rupees. But assigned value of it is just about 140 crore rupees. As he said that he is reviewing legal options as well. Nandakumar, in a letter to the company's board, has said the Enforcement Directorate search at the company's office was not related with the affairs of the company. He's also said the ED search directed at promoters' erstwhile firm, which is Manappuram Agro Farm, or Mangrove, that is known as, which does not exist any longer. Despite the letter coming to the board, despite trying to allay the fears that it is not linked to Manappuram Finance, the stock is getting hammered out of shape, 13.5% coming in for Manappuram Finance, and it is set for the worst weekly loss since February 2022.
Let's move on and talk about CEAT. And Harsh, how were the numbers looking like for this one?
Well, a strong set overall, Vinny. So we're seeing revenue from operations come in 11% higher. Nothing, no hue and cry there about that particular number. But when I'm looking at EBITDA, it's come in at 376 crore reported EBITDA versus 195 crore same time last year, which is a solid 92% jump on a year-on-year basis. Even sequentially, it's jumped a solid 60+%, and therefore margins is what we're seeing, and that number has gone up from 7.5% same time last year to 13.1% in Q4 of this year. Margins even sequentially have done very, very well. 8.5% was the margin number in Q3 versus a 13.1% number now. And we've seen PAT soar. It's gone up by 420%. So 5-bagger on PAT. 25 crore was the PAT number. Same time last year, it's come in at 132 crore in this particular quarter. So very solid set posted by CEAT, and on the back of that, you can see the stock buzzing 4% higher.
All right, that is the CEAT for you. We also spoke to Anand Goenka, who is the Vice Chairman of CEAT, and he expects a high single-digit growth or low double-digit demand growth in FY24. He's also spoken about the growth outlook as well as the capex plans going ahead for CEAT. Listen in.
With respect to the demand side, a lot of it came because of inflation and price increases. With raw material having stabilized, I don't see this inflationary impact and price increases coming into the coming year. On the demand side, I think demand is also relatively muted. I'd say we're coming out from a low base because of the COVID years in FY22, which affected FY23. That's got normalized in FY23. So FY24, I think we expect high single-digit, low double-digit kind of demand growth, and not really a 20% plus growth that we've seen in the last year. With respect to margins, we expect margins to be relatively stable because we are seeing some stability in raw material prices. We don't see much pressure in terms of changes in terms of selling price at this point of time. And we're working in terms of our own cost efficiencies that will hopefully also have some positive impact on margins.
Okay, let's bring on board our technical analyst for today, Vaishali Parekh, joining in with us. Vaishali, a very good afternoon to you as well. And the first stock that you picked out for us is Havells. Post its numbers, also we've seen a bit of a run-up coming in there. Today also the stock is buzzing in trade. What are the charts indicating for Havells now?
Hi, so Havells is one of the stocks which looks very attractive. Actually, I have spotted this stock right when it gave a breakout above 1250, and it's really shown a good run-up, but I still maintain my positive view. I think this can go towards 1320, 1330 as a near-term target.
All right, moving on. Lisa, let's talk about Paytm. It's all set to report its numbers today. What is the street anticipating for Paytm when they report their numbers?
Yes, absolutely. Paytm will be reporting their numbers, and analysts are expecting a good set of numbers for Paytm. Well, their revenue and the gross merchandise value, that is expected to grow strongly, and this is on the back of steady loan disbursement as well as new device addition. Talking about the other parameters, the EBITDA as well as the net loss, that is expected to narrow down versus the year-on-year numbers. In fact, net loss, that is expected to halve over last year. And talking about their quarterly updates, which they recently posted, that was also quite strong, where they said that the average monthly transacting users, that was up around 27% on year-on-year basis, and that reflects the expansion in the consumer base. Also, their gross merchandise value, that saw a growth of around 40% on year-on-year basis. So, well, on the back of good numbers expected, the stock has been surging, and it was 4% up in the early morning trade, and it also touched a high of around 678. Even on YTD basis, the stock has surged around 30% on the back of a good outlook. So, well, this is Paytm for you.
Okay, let's move on and mark the flashes on your screen. We're seeing the numbers that have come out from Symphony. And when you look at it, look at the profit decline. That is one that is a concern coming in. 59% decline in terms of the profits of the company. Profits are just at 16 crores versus 39 crores. Operating performance also seeing a bit of a weakness. EBITDA is at 23 crores versus 44 crores last year, down by 47%, and margin sharp contraction there, 800 basis point contraction, more than that. So, that is a clear pressure that has come in, because Cheryl, revenue saw a growth, but the operating performance has seen a clear decline coming in there. Obviously in terms of maybe some inflationary trends that are coming in, high cost inventory, is that still ruled out? Those are factors that we should be keeping an eye out for Symphony as well, especially this is a summer trend. This is the main season for them. That not doing well, that quarter not doing well is a key factor. And as of now also, you can see the stock is down almost 5% in trade, almost at the day's lowest point.
Also, let's not forget that the weather has been pretty as well, and also you had a higher raw material cost that may have weighed on all of these counters, especially in the Q4 of FY20. Now that you are seeing some settling down of those costs.
And that's what most of the commentary is coming, whether you see Havells, Blue Star, they're saying that, yeah, because of this erratic weather, the demand was a bit slow at the beginning of summer. Now they're hoping that there are no more unseasonal rains. The weather
You can't say that. You know what happened in Delhi yesterday.
But yes, hoping for the best. But as of now, Symphony is down and out in trade.
5% downtick coming in for Symphony on back of poor set of numbers. You have a sharp erosion coming in on the margin front as well. Moving on, Vaishali, let's talk about Adani Ports and how is this one looking to you on the charts? Do you think the erratic movement in the stock price is behind us now?
It's actually a vulnerable stock, but I do like this stock technically, definitely. So I would say keeping a strict stop loss, because I think yesterday the results were declared. I would say keeping a strict stop loss. One should hold on to this stock for a positional target of 800. So 650 would be the stop loss from here on, and look for a target of 800.
Okay, let's move on and talk about the next stock that is in focus, and that is Aptus Value. Now, they have come out with their earnings. We're seeing some focus on the back of its earnings. Now, earnings overall were in line when you look at it with the estimates that we saw coming in. Earnings were 3%, actually slightly below in terms of the estimates, and I saw a bit of a compression. Higher provisioning was there as well, and AUM saw an increase of around 30% on a year-on-year basis, led by 27% growth in the disbursement. Overall growth in home loans was also higher by 35% on a YOY basis, and NII's was 27% YOY, impacted by the 10 basis point spread compression on a quarter-on-quarter basis, as the cost of funds expanded by 20 basis point on a sequential basis. Keeping an eye on that one, the company's also said that the asset quality actually has seen an improvement, with the GS3 declining sharply to 1.15%, led by the net recoveries, a trend seen across most of the NBFCs in Q4 FY23. Let's keep an eye out on Aptus Value Housing on the back of its numbers. As of now, yes, given up those morning highs that we saw, but still holding on to that positive side, at least in this weakness that we saw in the market. 8.3% uptick there.
Absolutely.
0.83% uptick there, I mean.
But one particular counter is definitely not holding on to any sort of gains. It's Federal Bank. Dismal set of numbers coming in. We will have someone talk on it more on the show. 7% downtick coming in for that particular counter from the day's highest point. So that's Federal Bank for you. But talking about banks, Vaishali, ICICI Bank, how is this one looking on the charts?
So now, after seeing some negative view coming in HDFC, it's time for ICICI and SBI. These two are the favored banks right now in the banking sector. So I would give a positive view. Near-term support would lie at 920 and look for a target of 965.
All right, so that is ICICI Bank for you. Let's stay with the banks, especially the HDFC twins, who are weighing pretty heavy on the markets today. And if you look at the downfall coming in both of them, it's on back of the MSCI note that has come out. They both are among the top losers on the Nifty. MSCI said that it will use adjustment factor of 0.5 to compute the weightage of the merged entity. Remember, what the street was anticipating was that the weightage would be 1. HDFC Bank is subject to foreign ownership limit of 74% and has current foreign room below 15%, is what Nuvama researchers said. They've said that the foreign room of the merged entity to be above 15%, and the implementation would likely lead to outflow of $150 million to $200 million in the merged entity. Remember, the current HDFC weightage in MSCI India is 6.74%, and the merged entity is likely to have slightly lower weightage of above 6.5%. So that is what Nuvama had to say, and that's the note coming in from MSCI Index. As you can see, both the stocks down in excess of 5% as we speak.
Okay, I think we're going to keep it with the banking space in this segment, because especially you've picked out State Bank of India for us. How are you looking at the charts for this one? What should we be expecting in terms of up move? Last 1 month, 12% uptick. Sharper up moves expected here?
So I would say yes, SBI is picking up momentum, and that is what we saw from yesterday. Right from 570 levels, it is holding strong even in a choppy day when the Bank Nifty itself is showing some pressure. SBI and ICICI, as I mentioned, they look promising. So I would say buy now, buy in decline, keeping 560 as a support, and look for a target of 600, 620.
Okay, surely keeping an eye out on SBI as well. And surely the banking space has been in focus for a while. The numbers are surely keeping them a buzz as well. But let's move on to the next one. And Harsh, which is the next stock that you picked up for us today? What are you going to talk about?
Well, yes, it's going to be Blue Star. Good set of numbers coming in from Blue Star. So what we're seeing is that consolidated revenues come in 16% higher on a year-on-year basis. Solid set. And we're looking at profit after tax, which has gone up quite substantially from 76 crores this time last year. It's come at 225 crore, but there's a one-off there, and I will talk about that. But let's speak about EBITDA first. EBITDA has gone up by 25% year on year. It's coming at 179 crore versus that 143 crore number same time last year. So margins have expanded because EBITDA has grown faster than revenue. So we're seeing margin expansion of almost 50 bips. From that 6.3% mark, margins have gone to 6.8%. And what I did speak about was with regard to profitability, there's been a one-time sale of land, and post-tax, the impact on profits is around 140 crores. So if I just deduct that amount, broadly PAT has come in at 85 crore versus the 76 crore number same time last year. So that's broadly how Blue Star looks like. Largely a solid set, and you can see that initially the stock had risen up quite a bit, and it's trading absolutely flat after that.
All right, that is Blue Star for you. And consumer demand for the ACs continue to be strong is what Veer Saswani, who's the Vice Chairman and Managing Director of Blue Star, had to tell ET Now. Listening to what else he had to say about the demand in the sector as well as reasons for the surprise uptake in their margins.
So FY22 gross margins were one of the lowest we've ever had. We were severely hit in FY22. So we had an internal plan. Of course, as always, we say price increases we will try and do, which we did manage to do in the first half of the year, but then we were not able to increase prices anymore. We have taken up a very extensive and large total cost management program in the company, redesigning products, taking out costs, repositioning products in the market, all based on our significant investments in R&D and innovation. So because of those, we were able to bring down our cost of the products. If you look at the quarter-on-quarter improvements, so for the full year, gross margins would have improved about 50 basis points. But if you look at standalone Q4, you will see a big jump in gross margin, about 2.5% to 3% if I'm not mistaken.
Okay, keeping it then with Chola Investments on the charts. Vaishali, what is your indication in terms of charts for this one? They did come out with their numbers a couple of days back as well. What are the charts indicating now for this?
Well, it's showing a lot of strength, but by the time I've come to you on the channel, I think most of the rally has been done with. So I would say book profit from here on.
All right, moving on, Lisa, let's talk about United Breweries. How are the numbers? What are the brokerages saying?
Weak set of numbers from United Breweries, and even the outlook that also has been weak coming from the management commentary. The revenue, it saw modest growth of around 3.5%, and that was on the back of volume growth. That also came at around a modest growth of around 3%, which was led by the premium category. Well, this was attributed to high competition, and also some operating structural changes was made in Andhra Pradesh as well as Tamil Nadu. And talking about EBITDA, that's a steep fall of around 79%, and that, the margin also saw a steep fall, which was at around 3%, and this was compared to around 15%, which was seen last year. Gross margin was at 38%, which was the multi-year low. And the management, he said that the inflationary pressure on the cost, that is expected to continue, and it's not going to end anytime soon. So that is a negative commentary coming in from the management. The con call is expected at 4 p.m. today, and what is expected from the con call is, of course, the FY24 guidance, but what will be the pace of recovery going forward, the sustained volume growth, and also how long will it take for the high cost inventory to impact the margin and the market share loss which they may have suffered. So, well, United Breweries is in focus on the back of these numbers, and it also fell 4% down, but it recovered around 2% since then, but still trading in a negative territory.
Okay, Westlife Food World, or Westlife Developers as well as you know it as. Vaishali, charts for this one, what is it indicating? QSR space surely has been one which has been in focus for a couple of weeks now, and everyone's keeping an eye out on this one. What's your view on Westlife then?
So in fact, during the day, we've been witnessing, well, of course, this is a very smooth stock. In spite of a corrective day today that we are witnessing, but in the mid-cap counter, this is one of the stocks which is holding very well. So my view stays positive to buy now and in decline because the previous high has been around 830 levels. I think very likely to retest those levels.
You know, Vinny, when you just said that Westlife developers or, you know, Food World, all of these counters are in focus, I wanted to tell you, yes, they are especially in like prime focus only in this show.
Absolutely.
Because it's lunchtime show, so you think about all of these QSR space.
I think our thoughts are at least on that. Maybe our viewers are surely eating, but yes, it always surrounds that, and those names surely come up on the show as well.
Absolutely.
But let's move on and talk about Aavas Financiers. Now, this one is in focus, and we have some con call highlights that have actually come in from Aavas Financiers in terms of what are the key highlights. They're highlighting that Q4 FY23 is the first quarter completed under new Aavas 3.0 framework. This is the strongest quarter ever. Disbursement is at around 1,581 crores in Q4, which is up by 23%, highest ever quarterly disbursements as well. Also, the former MD stepped down due to personal reasons, is what they highlighted, and promoters and Kedara have not sold any shares since 2021 and have no plans to actually selling in terms of the shares in the coming year as well. They've guided for an AUM growth of 20 to 25%, and OPEX ratio is expected to moderate going forward. By FY25, product mix will be home loans and to non-home loans will be in the ratio of 70 to 30 as well, keeping an eye out on that one. What seems like it that Aavas, the management highlighted that Aavas is quite well placed in terms of to continue its industry-leading asset quality and further increased their 40 basis point with effect from May 5th, 2023. So keeping an eye out in terms of the hikes, also rate hikes as well that are coming from RBI. Let's keep an eye out on that one as well.
All right, moving on, Vaishali, let's talk about Nosil and how is this one looking in the charts to you?
So Nosil is looking very promising. I think it's holding very well, and I'm looking for a technical target of 240 to 260, and as prominent support at 215. So I would say buy with that support in mind.
All right, let's talk about L&T then. The cap good major is all set to report its earnings come next week, but CLSA has come out with a report on it where they're maintaining a buy stand. They've hiked the target for L&T to 2,790 rupees per share, right up from 2,570 rupees per share. They're saying that subsidiaries are on the right path of L&T. L&T Tech is leading the sector growth. Hyderabad Metro, they're waiting for the cash boost. Rate hike hurt as well is likely to be seen for L&T Housing Finance. They believe, L&T Finance Holding, they believe that has decisively bottomed and is set to grow strongly. As per L&T, they're saying the core orders are doing well for the major. They're expecting the company to win some large Middle East orders, and that will drive L&T's core business backlog. They're saying the key catalyst going ahead for L&T will be order inflow, double-digit growth in their core E&C execution, as well as margin expansion, this after 4 years, and as well as bump up in dividends. So a couple of catalysts at play for L&T. They're believing that their subsidiaries are on the right path, and all of that will augur well for the cap good major, that is L&T for you. So therefore, CLS is giving a thumbs up and raising target price.
Absolutely. Let's move on and talk about JSW Steel on the charts, Vaishali. When I'm looking at it right now, in the last 1 month, yes, has managed to see some sort of a run-up and an up move coming in there. But overall, it's been quiet in those range and not crossed about that 750 mark in the last 1 year, around those 750 mark since almost a year. So what is the target that one should keep an eye out on JSW Steel? Are we expecting any run-up now?
You're absolutely right. Actually, we are seeing that metal sector on the whole did show some pickup since 2 days, and today it is in lull. But JSW Steel per se, I think above 732, it holds very strong and a positive view, because in days to come we can see a target of 760. So my view stays positive with the support of 730.
All right, moving on. Harsh, finally, let's talk about Federal Bank. This one is under pressure, seen a sharp fall. In fact, after its earnings, last time we checked on the screen, 7% downtick coming in for that particular counter post. It's from the day's highest point, and most of the losses were post its earnings. How were the numbers?
Well, no major miss, Cheryl, except probably the NII number that's come in at 1900 crore versus what the street was broadly penciling in of around 2100 odd crore. So maybe a 5 to 7% miss over there is where I would call it. Where operating profit is concerned, that went up around 67% year on year. Solid jump up in operating profit. It's come in at 1335 crore. Provisioning came in at 117 crore versus 246 crore a quarter back. So that's in fact improving in terms of the provisioning. A year back, the provisions were at 75 crore, so really low base there. That may not be the correct metric to look at it. And profit after tax has come in at 903 crore, which is also a 67% jump. So a very solid those particular set of numbers. We are also looking at NPA improvement, 7 bips in terms of gross NPAs, not as major in terms of the gross NPAs coming off sharply. That's not happening. And net NPAs also going down by around 4 bips or so. What we're also seeing is on the slippages number, it's come in at 436 crore, which is a 10% jump on a quarter-on-quarter basis. Within slippages, the retail slippages have done well, but we're looking at some amount of pressure with regard to business banking as well as agri slippages. Both of those have actually doubled up sequentially, so need to try and understand as to what's gone wrong there. But otherwise, largely it's a steady set overall.
Slippages maybe seems like that concern over there as well. But on that note, we're going to step into a very short break. Viewers, don't go anywhere. We'll be back with more stocks after this break.